Welcome to the Deep Dive. We're here to help you quickly grasp the ideas that really matter. And today we're diving into something, well, fascinating. You often hear sort of whispered on Wall Street. It's this paradox. You don't ask to not seem stupid, and you end up acting like stupid by not asking. Sounds simple almost, doesn't it? But it holds this really profound, often quite painful truth.
It really does hit home. Yeah.
Yeah.
Our source material for this deep dive, it's, full of articles, research, and it really lays bare just how catastrophic this fear of looking ignorant can be. We're going to explore that, especially in finance where the stakes are just incredibly high.
Right. So our mission here is really to help you understand why those little omissions, the questions you kind of hold back, why they can spiral into massive consequences. And on the flip side, how asking simple, maybe brave questions can unlock enormous value. We'll look at how this fear has shaped financial history and, importantly, what steps we can actually take, to build a culture where curiosity is a strength, not a weakness. So let's unpack this.
Yeah, and you really dig into that saying. It just clicks with so much other wisdom, doesn't it? Eric Nielsen, UniCredit's chief economist, he put it very simply. He said, not asking questions to avoid appearing stupid won't get you any smarter. It's like the self-defeating loop, a trap, really.
A mental trap, yeah. And Wall Street seems to amplify it, doesn't it? This intense pressure to project confidence, like everything, analysts, traders, maybe avoiding what seem like stupid questions.
They're afraid, right? Afraid of damaging their reputation.
Exactly, appearing out of their depth. And it creates this dangerous cycle, almost collective ignorance, where admitting you have doubts, it feels like showing weakness in that super competitive space.
But is that fear, just a finance thing? Or is it more universal, something Wall Street just highlights? That's a great question. And it is really universal. Think about Einstein, right? Intelligent people question everything. The fear of looking foolish, it's actually counterproductive. It stifles curiosity, the very thing that leads to understanding. Our sources even mention how it's like satirized in films. The Wolf of Wall Street, characters dodging questions to keep up this facade and then making terrible decisions because of it.
Yeah. A dark comedy of unasked questions, like you said. And that silence, those unasked questions, they carry such a high cost. History is, well, unfortunately, full of examples. It's not just individual mistakes. It's systemic failures, rippling through whole economies.
Absolutely. I mean, look at the 2008 financial crisis. A huge part of that. So many investors, regulators, they just didn't question the risks baked into those subprime mortgage derivatives, these really complex products built on risky loans.
Right. The value wasn't clear.
Not at all. And the assumption was just, everything's fine. Maybe to avoid looking inexperienced in front of the supposed market experts. And the outcome, just staggering. An estimated $22 trillion in losses in the U.S. alone. That's a direct line, isn't it, from silence to recession?
It's incredible. And that pattern, it just repeats. Think about Enron back in 2001. The auditors, the executives, they saw red flags, right? But didn't really dig into the dodgy accounting. The simple question was maybe, how are they making that much profit? But maybe the fear of confronting the leaders, these charismatic figures, it kept people quiet.
Right.
And that silence, straight to bankruptcy, $74 billion in investor losses.
Or Bernie Madoff. Unraveling around the same time, 2008, the SEC got alerts, multiple alerts, but didn't dig deeper, didn't ask about those returns. Too consistent, too good to be true, really. The key question, how is he actually doing this year after year, so steady? But the fear of looking stupid, challenging this financial genius, it blocked investigation and allowed a $65 billion Ponzi scheme to just keep going for years.
And it's not just history. Look at FTX 2022, very recent. Investors didn't question the internal governance Sam Bankman-Fried set up, despite some pretty clear red flags, in their financials, their management style.
Yeah, very unconventional.
So again, the unasked questions were basic. Where's the oversight? How are these funds managed? And the result? $8 billion in losses. In every single case, the cost of not asking was just astronomical and maybe avoidable.
Utterly avoidable, I'd argue. Yes, but here's where it gets, more hopeful maybe. What happens if we flip this? What does the research say about the benefits when you actually encourage questions? It's not just about dodging disasters, it's about creating innovation, building resilience, finding new paths.
Okay, so creating value, not just cutting risk. Our sources mentioned Goldman Sachs, for instance, having these open questions protocols in meetings, and that apparently led to reducing risks. Tangible benefit right there.
Exactly. Tangible gains, and they go way beyond risk. Asking questions means more clarity, clearer investment strategies. You spot fraud earlier. And huge for professional development. Think about it. Someone who asks good questions, they learn faster, challenge bad assumptions. They become the problem solvers. And studies even suggest employees who ask more questions, they advance faster, like 15–20% faster in their careers.
Wow, that's a pretty powerful incentive, especially in finance, yeah, where knowledge is everything.
Definitely.
So, okay, that's compelling, but how do you actually do it? How do you build that kind of questioning culture, especially somewhere like Wall Street? What specific strategies did the sources point to?
Yeah, the material gets into some concrete ideas. One is these safe question sessions, dedicated time, judgment-free zones within team, where any question, however basic it seemed, is okay. Takes the fear out of it.
Removes that psychological barrier.
Right. Another is emotional intelligence training, based on models like Daniel Goleman's. Encouraging vulnerability, self-awareness, making it easier to say, I don't know. And third, using anonymous digital tools, maybe Slack channels, other platforms, so people can ask without personal exposure, especially if they're introverted or new.
That makes a lot of sense. Building trust, removing the friction, it all seems to circle back to that idea, doesn't it? Wisdom lies in knowing you don't know everything. It's what successful leaders seem to get. Acknowledging ignorance is the start of knowledge.
Precisely.
Okay, but as great as all this sounds, putting it into practice, it's not simple.
Yeah.
Especially in finance, there must be roadblocks, right? It's easy to say, ask more questions, but what are the real challenges?
Oh, definitely challenges. One big one highlighted is the gizmo culture, sometimes found on Wall Street, where vulnerability often gets equated with weakness. Overcoming that, it needs strong, inclusive leadership. Leaders have to model it. Show questioning as strength.
Right. Lead by example.
Yeah. Then there's time pressure. Huge issue. High-frequency trading, for example. Pausing to ask feels wrong, counterproductive. Every fraction of a second counts, or so the thinking goes.
So how do you tackle that?
Well, sources suggest things like cognitive multitasking training, helping teams weave questions into the flow, not as a break from it, making inquiry part of the fast process.
Interesting.
And then you've got cognitive biases, like the Dunning-Kruger effect, where, less competent people tend to overestimate how much they know. So in finance, where expertise is prized, they might be really reluctant to ask. They think they know enough. Or maybe they're scared asking will expose them. It's subtle, but powerful.
A real barrier. And what about modern work? Remote teams, post-pandemic? Does that change things?
It can, yeah. Questions can get lost in Slack, emails. That quick office chat doesn't happen. So the solution seems to be more interactive tools, more intentional virtual meetings, making sure there are specific ways for dynamic Q&A so nothing critical slips through.
Right, and any ethical angles.
Definitely. In finance, you have regulations, confidentiality. It's crucial. Balancing open questions with not spilling sensitive info. It's a tightrope walk. It needs a nuanced approach, not just a free-for-all. So yeah, the challenges are real. They need institutional commitment. But the sources are pretty clear. The benefits of overcoming them, they far outweigh the barriers. It leads to a wiser, more sustainable financial world.
So bringing it all together then, the core lesson from this whole Wall Street paradox seems pretty profound. That momentary cost, maybe feeling a bit stupid for asking, it's tiny, just minuscule. Compared to the catastrophic results of acting from ignorance, in finance, curiosity, it's not some nice-to-have luxury. It's absolutely essential, not just avoiding failure, but actively building value.
Resilience. Exactly. And this goes way beyond finance, doesn't it? Building a culture where questions are welcome, it transforms environments, takes them from potentially toxic, siloed places to collaborative, innovative ones. It builds trust, collective smarts, a better way forward, whether you're analyzing markets or, planning your next team project.
Absolutely. So, as we wrap up this deep dive, here's something to think about. Considering the huge impact of just asking, what seemingly obvious questions might you be holding back in your work, maybe even your personal life? And what could be the unseen cost of that silence?